All right, the recording has started. Okay, so if you have any comments, feedback, questions, just butt in or just chuck it up here in the chat and I'll have a look at that. Otherwise, let's kick things off. So broad thesis, sort of where are we? So there were a few things that I highlighted that may have provided us a market reversal. We didn't get it with the China trade deal. We didn't get it with the government shutdown. Do we get it with pivoting towards continued rate cuts and end of QT into 2026? Probably. But if I just take a second to step back and zoom out, and let's just have a think about what's actually happening. So what's actually happening is it's a sentiment-driven sell-off, both in equities and BTC or risk assets. So it's sentiment. How do we know that it's sentiment? Because there's nothing from the Roro tool perspective, there's nothing there that says, in fact, it's the highest level that we've had for several weeks now because the geopolitical risk index has flipped to risk on again just yesterday. So it's not it's not a macro driven sell-off, so it's a sentiment driven sell-off. If we look at what are the things that are actually selling off, I go into here and look at what's actually selling off here. Indices, so NASDAQ futures are down minus 0.6, S&P futures are down minus 0.1. If I look at these risk assets that I've got here in equities, you can see what's selling off. Iron, AI, Ionic, Quantum, eToro, AI, Hood, AI, Circle, crypto, that sort of thing. And then if I go a little bit more specific, I've got a whole bunch of AI plays that are selling off as well. AI CapEx, so the big CapEx guys in AI, and also the build-out guys in AI. So energy build-outs, Vestas, etc. They're selling off as well. And anything that's AI related that doesn't have any profit, so something like APLD looks horrific. What else is selling off? So we're also seeing subprime lenders selling off as well. Companies like Carvana, SoFi, Affirm, telling us that, hey, there's rising delinquencies, which means there's probably credit stress. And these rising delinquencies are happening. I'll just keep admitting, folks. These rising delinquencies are happening on the folks that don't have good credit ratings as well. So, perhaps millennials, lower, people that have gone bankrupt before, people that are close to bankruptcy, have high credit card bills that they can't pay, that sort of thing. So tech is clearly selling off. We can see that with NASDAQ already down about 4.6%. We see that with the S&P as well. Commit, Owen, Wayne, Eva. Okay. We see that with NASDAQ and S&P as well, 2.82%. Okay, cool. So it's sentiment driven. So one of the things, now that I know what it is that's actually selling off, the stuff that's selling off is AI. Does it make sense that AI, quantum, crypto is selling off? Well, it makes sense because it's happening. But for me, I look at it from like, okay, well, why would it make sense that AI is selling off? And it comes down to three things. One of those things, I'll just keep adding people. Yeah. Okay. So one of those things is the AI CapEx is slowing down, which it's not. So if AI CapEx is not slowing down, it means that these companies really want to win this race. They're seeing that the AI, whoever wins AI wins the world, so they want to win it. So AI CapEx, is it slowing down? No. But as a result of it not slowing down, they're continuing to spend. So we've got things like Meta. Where's Meta? Meta, which have already sold off 25%. Because people are getting worried, like, why are you spending so much? The returns aren't there. And to them, I'd say, well, the returns aren't there yet, right? You've got to onboard people, not just consumers. You've got to onboard corporates. And in the corporate world, you don't just click your fingers and AI build out across every company is complete. So one of them is AI CapEx. It's not slowing down. Then we look at forward earnings for these companies. Are they slowing down? Or earnings, or the current earnings, Q3 earnings, are they slowing down? And they're not. I showed here somewhere. Yep. Q3 earnings have remained solid, 82% beat rate in the S&P 500. And then if I look at Infotech, 92% beat rate, S&P 82. So are earnings starting to be rocky? No, they're not. So that's the second one that says like, okay, from a fundamentals perspective, this is more sentiment driven. And then the final one is, well, is the utilization of these data centers sort of falling like they were in back in the .com bubble, where we laid all this fiber, all these cables to support the internet connection, or to support the connectivity of the world, but they weren't being utilized, and that's not as well. In fact, we get the complete opposite. You've got folks that own land that's fit for data centers, not wanting to sell it, or wanting to sell it at really high prices. You've got data centers not being able to connect to the grid because the grid can't handle it, i.e. Texas, slowing down their rate of connections, not being able to handle it. And you've got the base loads effectively doubling for each sort of region in the US, and over the next 3 years. So that tells me from a fundamentals perspective, we've got so much more in the tank from the AI build out. So then it's a sentiment driven sell-off. So then, okay, fair enough. It's a sentiment driven sell-off. How long can this last is anybody's guess. But to me, that tells me it's not going to be a 2022 style event where you've got macro data coming in, horrifically inflation pumping. Just admit, Ben. Inflation pumping, the Fed hiking rates, that sort of thing. So, we talk about these fundamentals and I go, okay, AI selling off, quantum selling off, crypto selling off, it's sentiment driven. It's nothing that we look at it and go, structurally, something's wrong. Credit is something that, could go wrong. And however, the Fed is able to do something about that anytime they wish. The Treasury is able to do something, pull their own levers as well anytime they wish. So for me, I look at that and go, I don't think it's something that that's necessarily wrong right now, but could it go wrong? Yeah, absolutely. And is there a backstop? Yes, there is. The problem with the backstop, and I'll just add Evan, the problem with the backstop is the backstop, i.e. the Trump put, may come in, but it's not going to come in when the NASDAQ is 5% off its all-time highs, 4.7% off its all-time highs. The last time the Trump put came in was, NASDAQ being 25% off its all-time highs. So the question that I would have here is this sentiment-driven sell-off going to last? Or is it just going to, and is it going to accelerate? So for me, it's not going to last. But then the question is like, when do things change? Perhaps it's Q1, perhaps it's Q2. For me, I'm looking at towards mid to late December, start of Q1. That's when I think things could change. It could get lower. It could go lower from here. But purely because it is a sentiment-driven sell-off, for me, I'm like, okay, Roro tools still risk on. From the crypto perspective, it's not. From crypto perspective, we're at 58% bullish total, but crypto is zero. Anyone that's looked at a crypto chart, you can see that it's at zero. So for me, I look at this and go, okay, cool. I think this too shall pass. And then when I start looking at the BTC charts, ETH charts, SOL charts, and specifically start looking at things like, okay, let's have a look at some of these drawdowns that have happened and why they've happened. So over the course of this entire cycle, we've had between 20 and 30% sell-offs. Some of these big ones, March to August 2024, 32%. I believe that bottomed during the yen carry trade unwind, or fears of the yen carry trade unwind. We had another one at the start of 2025, policy-induced sell-off due to tariffs. And now we've currently got one at, it's down 24%, is it? Currently down 24% from all-time highs. And if I start looking at okay, what's 32% here? So we're looking at an $85,000 BTC. And I'd like to also remind you again, it's sentiment driven, not policy driven as well. So could this happen? Absolutely. From my perspective, these sorts of numbers, and I've put them in the newsletter as well, are more plausible. Something like 90 to 95K. So in this sort of region, this sort of demand.
Becky 25, yeah, please.
Hello. Yep. Hey, Ben, did you have a question or thought on this? Nope. Sorry, I thought I heard someone. Okay. All right, cool. Now, by the way, any questions so far? Any thoughts, any views? Keen to get people's input here. Stop for a second,
Philip.
Let folks talk. Yep. John.
Has there, looking back through history, has there been times where on the Roro tool, crypto is all red and the rest of macro is green? And what has happened in those circumstances? Was crypto a foreshadowing macro coming negative, or was it the other way around and crypto eventually turned around and to match the macro?
Not all green, but green, yes. So for example, during the most recent example is during this tariff policy-induced sell-off as well. Remember, most of them are momentum indicators, so they'll all flip red eventually, and you'll still have just add Raphael, and you'll still have macro. Not all green, but macro was positive to a degree. It just kept Roro in risk off because we had a high Dixie, we had other risk assets like NASDAQ selling off. So there are periods of time like here that you get macro or crypto all red, but macro is still positive to a degree. But Roro was risk off here. Roro is not risk off now. Has there been a period of time in a bear market where macro's green, macro's green, Roro and crypto's all red? No, there hasn't. I think that's what you're asking, right?
Yeah, and back in 21, 22, was there a time like that?
So 21, 22, again, macro was green. When I say green, by the way, I don't mean all green. I mean just more bullish macro than bearish. So mid 21, 22, macro was green. Towards the end of 21, 22, macro started flipping red. Okay, sorry about that. Yeah, so, and towards the end of 2021, that's when macro started turning as well. There haven't been bear markets where we've had macro green, predominantly green, and a bear market ensued. I think that's what you're asking, right?
Yeah, basically, yeah.
I am recording it. I am. Okay, so from my perspective, I'm going, this is sentiment driven. Could it last? I think it could last a little while longer. I think we're seeing something here in terms of BTC, and I put this in the newsletter as well. Somewhere in the 93 region, I think is appropriate. I know there's a few people that are saying, hold on, I want to de-risk. So for those people that want to de-risk, I think that's perfectly appropriate. If you haven't already de-risked, I think that's perfectly appropriate. So what would I do if I was looking to de-risk? Now, I will say one thing. Given that we've broken 98K and SOL 145, I can expect BTC to go into the 90s, low 90s, and Solana to go into the, sort of 120s. I'll just go back here. I can expect something like in the 120s for SOL. So from here, that's another, 10 or 20%. So what I intend to do is keep the exposure, but trade it. So for example, SOL getting between 150 and 155, I'll reduce my exposure and then put the exposure back on in this sort of region here between 140 and 120. Same as BTC as well. So if we hit 102, 103, 104, 105, reduce some exposure here, and then re-enter at a sweep of these sort of lows. Could go lower. It just means that I've reduced my downside a little bit. So that's, and I don't plan on doing it with the whole portfolio, just small parts of the portfolio. So if you wanted to just reduce exposure, that's absolutely plausible. And one of those things is like BTC at 102, Solana at 150 to 155. I think we easily get a 150 to 155. And that's purely given the, from the lows to the highs, 23%, lows to the highs, 20%. So depending on where we come here, if that was the low, this is the sort of level we're looking at. So I think 155 is an appropriate area to sort of de-risk. Mind you, the reason why I'm not concerned, my bags are going lower is because it's a sentiment-driven sell-off. So sooner or later, sellers get exhausted, and then we realize, hold on a second, macro is still positive. They're running the economy hot. QT has ended. We're near all-time highs with the S&P and the NASDAQ, and we'll be back up at all-time highs, local highs, that sort of thing. So for me, this is one of those periods where it's like, okay, cool. We've had some volatility. We've got a trending down market. But if we get a break of 107 for BTC, if we get a break of 170 for Solana, if we get a break of 3671 for ETH, we've got bulls are back in action. So I think we're not too far from like a local bottom as well. I believe in my newsletter, I mentioned that can it go to 98? Yeah, can it go to like 93? I might have put it in a post or something. Can it go to 93? Absolutely, it can. And Solana 130s, absolutely. ETH 2800s, yeah, it definitely can. From my perspective, the upside at 130, 140, 150 is more than the downside because the macro is positive and because it's sentiment driven. So does it feel good? Absolutely not. But am I concerned that I'm going to hold through a bear market? No. Now, if macro starts flipping and these things that I've mentioned from the AI build out, because remember, AI has been the only thing that's driving us. So is AI selling off? Yes, it is. But the AI build out continues. So GDP growth continues. So unless those things start rolling over, I'm not too concerned. Okay, Ben saying, where are your circuit breakers set? So with circuit breakers, so what I've decided to do is I'm just going to reduce some exposure here. At the bounce, reduce some exposure for BTC around 102, SOL 150 to 155, reduce exposure, but then buy it back. And the reason I'm buying it back is RORO continues to be risk on. If RORO were to be risk off, then I'd say, okay, that's actually an issue. I'm going to cut my bags and wait for better times. I will also add that, if I look at these periods, if we forget about what's happening today and we look at we had this sell-off in BTC at the start of the year, and then it continued on upwards. Policy induced, the policy was reversed, we're off to the races. We had something similar in 2024, sold off 30%. Because the macro picture is positive, markets kept going higher. If the macro picture turns negative, that's a completely different story. I'd cut my bags without thinking twice. But I'm less concerned now when macro is so strong or so positive. That's not to say macro will be positive this entire time as well. I've shown in the newsletter as well. Oops, show here as well. Things like some of the things that I was looking out for. Clearly, the 4-year cycle narrative is real, unlikely to fade. USD strength, actually USD's rolled over, which is great to see, and I think it continues to roll over as the Fed eases, whether that's December or January. Unemployment will continue to rise. We're starting to see unemployment rising, more job losses as well. So that'll continue to rise, which means that'll force Fed, as long as inflation doesn't become a more alarming issue, that'll force the Fed to continue cutting. So, and then the question is like, okay, global liquidity. What about global liquidity? This is my trend line for global liquidity. And as you can see, it's starting to roll over. So extrapolating this out, the rollover begins the downturn in about Q2 2026. So we've got between now and sometime in Q2 2026 for global liquidity to roll over. So that's one of those things on the horizon 6 months out that I'm looking at that's going like, yeah, it's probably a good time to reduce exposure because macro will turn. Any questions, thoughts on that?
So Philip, you don't really have a price level circuit breaker right now. It's more just RoRo, right? So as long as RoRo remains positive, that means it's sentiment-based sell-off. Therefore, there's no price at which you would sell.
There's no price at which I'll sell, with the caveat that I'll just try and reduce my drawdown by just selling a range, right? That's all I'm really trying to do. So yeah, like I said with Solana and BTC. Yeah.
Got it. And where would you consider allocating your remaining 20%?
Oh, that's a really good question. It would be to SOL, and I'd probably be looking in the 120s to allocate the remaining 120 because I'll look at it this way as well. Actually, I'll just bring up the chart for a second. So I would look at and I'd do it in here. That's where I'd like to be allocating. So 125 to 137. The reason being is like, can we go lower? For sure. But allocating at 125 for something that we know does 250, 300, cool. With a macro positive outlook, this is a no-brainer for me.
And that's also where you're going to add back. If you do sell at 150, 155, you're going to start adding back here, right? Below 140.
Yeah. So in this region as well. So if I'm selling 155, I want to see a sweep of the lows. So basically looking for swing failure patterns. So let's assume that this is the low, and we bounce to say 155, right in line with this sort of support turned resistance level. 155, I'll sell that, and then I'll just buy here. Could we go lower? For sure. Absolutely. But I've just saved myself whatever 155 minus, 138 is.
Yeah.
Yeah. I also do think we bottom somewhere around here as well. So I'm not really, I don't really want to be selling the lows and then watching it rally, because macro has been positive this whole time. And this is sentiment-driven sell-off based on what? For BTC, based on there's a 4-year cycle. So, yeah. One of the other things that I'll say is it's probably not a good thing to be doom scrolling on Twitter as well, because we'll get. So, for example, in a bull market, when we're trending upwards, are we looking at Twitter? I don't know. Some folks might be, but I tend not to pay attention to people's views on me. In fact, I'll look at, we'll scrape Twitter, we'll scrape retail sort of sentiment, all-time high sentiment for certain coins, and then we'll set our price targets under that. So then why would I then come to Twitter for help to understand where we're at in the market? as well, because you'll get some people saying we're bullish, you'll get some people saying we're bearish, and then you're left somewhere in the middle going, what the hell is going on? So I think it's appropriate to just come up with a strategy. For me, that strategy is I want to be allocating in these levels. I want to be reducing my exposure at these sort of swings, and then reallocating down here in this region as well. Simple strategy, and I'll do that all the way down, even if we get down to whatever this level was, 95. I'll do the exact same thing. I saw someone chart this out. And then down to 45 or whatever it was, 45, like this level here. An 80% sell-off in Solana. I think it's absolutely possible when macros are not looking positive. But I just think there's too much buying power coming in at these regions not to, in order to get that. One interesting take that I heard from Mike Novogratz is he asked an interviewer the question, like, where would that price for BTC be where you would just dump all your money in and say, this, I can't not buy this? And after a little bit of time, Mike's answer was 84 grand. So then when I look at 84 grand, I thought that's pretty interesting. Why 84? I think he said 86 actually. So we look at these, what are we seeing? So 31%, 86 grand is about 31%. So just another regular 31% correction. This demand zone in here and macro is positive. So I think, yeah, this is why I say like demand will step in, because it's not a sell-off because, we've got inflation, we've got Dixie going up, we've got rates going up, we've got the housing market collapsing, whatever it may be. That's their top end cost of production for Galaxy. And I believe it's around that level, 76K is the BTC break even for miners, I believe. Could bounce from here to around, which would be a good opportunity to de-risk before another potential move down. So for those that are looking to de-risk, then I think it's appropriate at 102 to de-risk. BTC could go to 93, and I'll show you this as well. I won't use my fibs. I'll just show you the sort of moves that we're expecting on BTC. 8% move, 12% move. So from here, maybe a 7% move is about 103, 102, and these are levels as well, right? So this sort of level in here. So 102, somewhere around there, is a good opportunity to de-risk if you plan to buy it back in this region as well, because all I'm trying to do is I'm just going to reduce my drawdown a little bit. If you're going to sit there and think, oh, bugger, what should I do? What you can do is de-risk there. If you're not going to do what I said and, sort of just de-risk, reduce your exposure, and then buy back the swing low, then you can wait for something like this. But there's a caveat here. So you can wait for something like this where BTC breaks through. Right, not this one. This one. Where BTC breaks through, retests that level that you had cut exposure, and that's where you can enter. So you can do something like that. I prefer reduce my exposure a little bit at a resistance level, at a key resistance level. Because even if it does end up going through it, it's going to probably pull back first before it goes through that. So say this was the low. So if this is the resistance level, so if we're looking at these sort of things the last time, these sort of things are resistance levels. So this in here. So if I'm selling here and then rebuying at whatever these swing lows are in here, and then it continues onwards, great. So the reason why I don't like to wait for the pullback on, say, a resistance level is what if the pullback doesn't come? And then what? I'm chasing higher, and what if it rolls over? So that's why I'll reduce exposure there. 102, then buy back the 97, 98K, could go to 93. I've just saved myself 5K. Keen to hear from other folks. Any thoughts, views? What's going on in your head right now? What are you thinking? Oh yeah, Ben would love to buy more SOL at 95. Oh, especially in a positive macro regime with the government saying run it hot. That's why I just think it's illogical for us to get to 95. If we did, to be honest, if we got to 95K SOL, I'd probably start using a little bit of leverage. Low leverage, but I'd use a little bit of leverage, borrow against my SOL stack and start adding some at that level. That's yeah. Any other thoughts, questions?
Philip, I noticed on my standard stocks and shares portfolio, things like Nike are starting to look like they're starting to bottom out and bounce, so which sort of suggests that your theory around this is sentiment driven is again another factor really, that the consumer stuff data is maybe perhaps still strong and could potentially be looking at those stocks starting to rise. Lululemon as well, another consumer one, starting to look like it might be bottoming.
Yeah, those consumer stocks. Interesting with that you mentioned Nike, because that was one of my trades a few years back. Yeah, interesting. You're right. It does look like it's bottoming. Let's have a look at the daily. Oof. Sure. Lower low, lower high. Maybe this is the start of a trend change. Possibly, yeah. Yeah, so there's a bit of a rotation play going on, right? If things like Nike defensives as well start catching a bid, it's a more defensive play. But how long can you get defensive as well? Like in a positive macro regime where they're printing and where they're running the economy hot. I don't think defensives is the play for long. Sorry, I wasn't sharing my screen. Good point, Dan. Any other thoughts? If there's nothing else, maybe we leave it there, gents, ladies and gents.
Thanks very much.
Go. No worries. Thanks, everyone. Oh, Raphael, any thoughts on Mars MSTR going under NAV, under 1? We would get a sweep and run, but it's looking to break down. I don't actually have any thoughts on MicroStrategy going below NAV. At the bottom of the last bear market, people were saying things like, "Oh, MicroStrategy is going to blow up. MicroStrategy is going to blow up." The sentiment on crypto Twitter was absolutely massive for that. And what happened? They didn't blow up. Nothing happened. So, the fact that it can go below 1 and the fact that it can go above 1 makes me go like, okay, well, am I really going to be buying it now? Perhaps the play is, if it gets to 0.8, you buy it on the basis that it could, go to 1.5 MNAV, which means you would outperform BTC massively. But I don't think that the MNAVs of 2.5 that we previously saw in MicroStrategy, I think those days are over. It seems like those days are over based on some of the stuff that Michael Saylor had come out and said about, we're slowing down the pace of our buying. We're trying to bring our MNAV down. We're only going to be buying at these levels. So I think those heydays of like MNAV sitting at 2.5, and I think those days are gone. Yes. Cool. We will leave it there. Thank you very much, everyone, for joining. I'll speak to you next time, and I'll chuck this in the Teams, in the Substack chat in a little bit. Thanks, everyone.